Good morning. Thank you for joining us. Again, brokerages are divided on how they are assessing the number, but frankly, the headline which I got from you yesterday at the press conference was order book highest ever, order book growth for the quarter gone by 30% higher than your best quarter ever. That just speaks volumes, isn't it? That is a clear indication of business momentum.
Yeah, I think so. I think I can also understand why people try to read into every bit of detail and ask doubtful questions. Fundamentally, if you really look at the track record over the last several years, I think we have consistently delivered. But it's also true that there has been an expectation mismatch for about 4 or 5 quarters now, especially in dollar term revenue growth. So that does get people worked up in terms of how do we estimate TCS. And we have had several quarters in the past where every one of our cylinders are firing, and sometimes, especially in the last few quarters, we have been having softness somewhere or the other, and those surprises definitely add up. Okay, it may be a small miss in one quarter, small miss in another quarter, but when you have gaps building up in small amounts or multiple quarters, I think there is a mismatch that happens, and I hope that gets addressed soon. But otherwise, if you really see, it's been a good quarter. We accelerated from Q1, but we also started Q1 with a 3.5%. So when you start at 3.5, then you go to 3.9. Also, we had to take into account the fact that we had the Q3, Q4 were not very good endings for us. Yeah. Okay, so especially in dollar term, we had a huge cross currency, and then we had a bad Q3, bad Q4 from a dollar revenue point of view. Then from there again to climb up, it becomes difficult. So there are a lot of these factors have played out. But if you look at the numbers, I think we are very happy with the deal wins, very happy with the volume growth, 4.9%. Order book is very, very good. We normally don't share numbers, and sometimes when it's very important or when it is significant enough that it's important to we feel it's important to share. That's why we share the number. Otherwise, I have not given any order book commentary at all in the past. All we will say is the number of deal wins. But from a deal signing point of view, it's an excellent quarter, and there are no lumpy one-off deals anywhere. So that makes it interesting.
No, it was a refreshing change to get a number. We would certainly encourage you to share more numbers, because that really, we can really put things in perspective then. Yeah. So can I safely assume that the handover from Q2 to Q3 is extremely encouraging? Order book is strong. There is all-round growth, barring one, geography and one particular vertical. Things are looking up.
Yeah, but then the usual headwinds will be there in Q3. So I hope that the furloughs and that we normally have doesn't expand. But so far we have no indications that furloughs are going to be any different from the earlier years. But we do get a very good grip on it post 15th of November. I hope that that stays like before.
But at a time when there has been a refresh in technology, digital is now 13% of your total business. The digital spending and digital platform are completely different. You can shop 24/7, you can bank on a Sunday. The historical seasonality what we've seen with Indian IT companies, largely because of holidays and New Year and Thanksgiving bunched up issues, will they be past now? Will that be passé now, purely because of the refresh in technology?
No, probably not. For that to happen, to some extent, our business models also have to change a little bit. Apart from the typical contracts we have in terms of time and material and fixed price, and we are now getting into a lot of intellectual property based contracts, whether it is licensing, whether it is platforms, service as a software, right? And I think the incremental revenues of these new models have to increase to a material size. Once that happens, I think we can buck the seasonality trend, and we need to do that. I entirely agree with you, because we can't have uncertainty of this kind. So which will require us to gain scale in some of the new areas and the business models that we are currently building on.
You know, every time there has been a technology refresh, if I look at the history of TCS, you've only emerged as a stronger and a better company, and your margin profile has changed. The migration from 80s to 90s, when we saw the migration through .com and other services, TCS has only become better. So this refresh in the digital technology, will that make TCS a stronger, a bigger and a better company, both in terms of market share, also in terms of margins?
I would strongly agree with you. I believe that possibility is there, and that's what we should do. And at TCS we have been making significant investments, whether it is in talent development or whether it is in building IP or building our own digital learning platforms, or customer collaboration centers, new business models like the digital platforms, automation, Ignio. So there are many investments we have done. We have got to make each of these count, and I think there is a significant opportunity for us to deliver on these bets that we have made, and then time will tell.
Let me take the clock back 3 quarters, 4 quarters back. There were half a dozen problems for TCS. Number one was Diligenta, second was energy vertical, then there was volatility in India, then there was telecom vertical, then there was LATAM. Currently there are only 2 problems. So the underlying problems, which if there were 6 or 7 about a year ago, now there's only 2. So that's great news, isn't it?
I think good positive way to look at it. I think the energy vertical, I still feel that will be under stress. We don't have a big pipeline in that vertical, but having said that, it is a smaller portion of our, though it's 5% plus growth in this quarter. I don't expect such kind of growth to sustain, just because that deal pipeline is not there, but that's a very small number. So I would just mention that. Apart from that, I believe that Latin America, I think, will be back from here. I really believe so. And in terms of all the other verticals, I feel good with where we are. Manufacturing has an impact of the Japan. Once Japan starts to grow, I think you will not see that softness in manufacturing. Otherwise, manufacturing rest of the world has done well. But if you have a degrowth somewhere, that does impact manufacturing vertical. Telecom, I'm not very bullish about the growth rate, but I don't see it as a big weak spot or anything. It will be okay. It will be a moderate performance. Now,
you managed to grow in an environment where the US growth for last 3 or 4 years was slightly anemic. Europe, we know, was not growing at all. European economy was contracting. So the point I'm trying to really bring out here is that TCS has managed to grow irrespective of the underlying economic environment. Now the economic environment is getting better. It will certainly be better given the way the comments are coming from various agencies. So in an environment when growth was poor, you were growing. In an environment where growth will be strong, what will happen to you?
No, I have always said that we are going to decouple the macro with our industry, because we are a solution to the problem. Okay, I really believe that there will be companies who we will engage, where we will help them transform into the new technological footprint, and we will also partner with companies to completely play offense in the digital environment. So these are the 2 types of opportunities, and they are going to happen with every market. They are going to happen in every industry with every company. So in fact, my own message to myself is that we've got to be doing much better in the US and Europe.
So then why your growth rate for Q2 in Europe and in US was not in line with your historical averages?
I think we have done better than, actually you have to see the acceleration. So you can't really take one particular quarter and then see, is it accelerating from Q1 to Q2? Usually that's the trend. As long as that acceleration is there, things are okay. But you would like it to accelerate faster, and that opportunity will build up as companies start to spend more. And companies in the digital space will spend more as as we go into the future. And when that happens, I think we'll take advantage of that.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.